By the time this video ends, your real net worth will have statistically decreased. They keep telling you 2026 is the year of stabilization. They tell you inflation is back to normal. They are lying to your face. What you are feeling right now, the tightening chest when you buy groceries, the dream of home ownership slipping away, isn't just bad luck or a temporary economic cycle. It's a demolition. The greatest heist in human history isn't happening in a bank vault. It's happening in your savings account right now. While you sleep, you are living through a historic wealth transfer designed to move capital from the many to the very, very few. And if you don't understand the mechanics of this machine right now, you will be its fuel. Welcome to Finance Scope. The narrative for 2026 is that the storm has passed. The reality is that the landscape has been permanently altered. The middle class isn't dying by accident. It is being systematically liquidated to balance the books of a new financial reality. In the next few minutes, we're going to expose exactly where your money is silently migrating to, and, more importantly, the 3 critical steps you must take immediately to stop bleeding cash and position yourself on the right side of this transfer. For decades, the path was clear. Go to school, get a good job, save your money, buy a house. That contract is null and void. It was broken by a phenomenon we call the silent crash. You aren't losing money because your paycheck got smaller. You're losing money because the things you need to survive, housing, energy, food, are being radically repriced upward by forces totally out of your control. Think about housing. Why can't a dual-income family buy a starter home in 2026? Because you aren't competing with another family anymore. You are competing with BlackRock, Vanguard, and sovereign wealth funds that have access to virtually unlimited, near 0% capital. Imagine playing Monopoly, where the banker has already bought Boardwalk and Park Place before you even rolled the dice. That's the housing market. They buy properties in cash, sight unseen, turning neighborhoods into rental portfolios. They are turning the middle class into a permanent renter class. This isn't a free market. It's institutional feudalism. And then there's the currency itself. The government prints trillions to bail out the system at the top, diluting the value of the dollars in your pocket at the bottom. They call it quantitative easing. It's actually just theft via debasement. Every time they print a new dollar, the one you worked for buys a little less. You are running on a treadmill that central bankers are constantly speeding up. So, if the middle class is being wiped out, where's the money going? It didn't just vanish. Energy cannot be destroyed, only transferred. Financial energy is the same. We are witnessing the ultimate divergence, the K-shaped recovery on steroids. The economy is booming for those who own assets and collapsing for those who rely on wages. The pandemic and the subsequent economic shocks acted as a massive consolidation event. Small businesses were crushed by regulations and supply chain chaos. Giant corporations, flush with cheap debt, bought up the market share for pennies on the dollar. The wealth isn't going to the rich in a generic sense. It's flowing specifically to holders of scarce income-generating capital. If your wealth is stored in labor, you're losing. If your wealth is stored in scarce assets, you are winning. The gap between those two groups is no longer a crack, it's a canyon. And in 2026, you have to decide which side of the canyon you're standing on. Feeling angry is natural, but anger won't protect your capital. Strategy will. You cannot stop the wealth transfer, but you can reposition yourself to benefit from it. Here are 3 high-level imperatives for the current economic reality. First, you must escape the cash trap. Cash is a melting ice cube. In a high-debt environment, governments must inflate away their obligations. Your savings account is their piggy bank. You need to allocate a portion of your net worth into assets that central bankers cannot print. We're talking about absolute scarcity. Physical gold and silver have preserved purchasing power for 5,000 years. Bitcoin, despite its volatility, is the only mathematically finite liquid asset on the planet. These aren't investments in the traditional sense. They are insurance policies against currency debasement. Second, stop relying on linear wages. The old model of trading time for money is a losing battle against inflation. You must acquire leverage. In 2026, leverage means code, media, or capital. If you can't write code, you must learn to utilize the tools that do. If you don't have capital, you need to build an audience or a scalable skill set, something that pays you while you sleep. The goal is to disconnect your income from the number of hours you physically work. If your income isn't scalable, inflation will eventually overtake it. Third, stop watching the stock market and start watching the bond market and central bank liquidity. Most people buy what feels good when it's expensive and sell what feels scary when it's cheap. The elite investors do the opposite because they track global liquidity. When central banks inject money, asset prices rise, regardless of the real economy. When they withdraw it, things crash. You need to educate yourself on macroeconomics so you aren't reacting to headlines, but anticipating capital flows. Stop acting like a consumer of financial products and start thinking like an allocator of capital. The middle class isn't disappearing. It's being redefined. There will only be two classes in the coming decade: those who own the system and those who are owned by it. The window to choose your side is closing fast. This is the financial reality mainstream media won't touch. If you want the unfiltered truth about the global economy and the strategies to thrive in it, you need to be here. Subscribe to Finance Scope. Become a master of your financial destiny, not a victim of it. We'll see you in the next briefing.